Welcome back, ladies and gentlemen, to Lotus Resources channel, forefronting uranium exploration with proven producers. Joining us today, Managing Director Keith Bowes. Welcome back, sir.
Thank you very much for having me, and good to see you again.
You as well, and probably one of the most interesting years for the commodity market. We're going to be discussing a lot in this video, trying to get the full view picture, but I want to start off with some of the news cycles coming out, because I mean, first and foremost, the drilling successfully expands mineralized footprint at the Kayelekera uranium deposit you guys have there. Do you want to just kind of front that up real quick and just give us an idea of what's going on?
Yeah, sure. So last year, about middle of the year or so, we made the decision to actually put some dollars into an exploration budget. And we decided to approach our exploration from a couple of different areas. So the results that we've just reported, which show that the actual existing resource can be expanded, was the first focus of that drill program. And what we did is we went through the existing resource models and all that. We looked for where areas that we thought there were potential for expansions, put the drill rig and sort of like stepped out 100 meters or so, put down a hole. If we saw some interesting geology there or saw some interesting mineralization, we would then step out another 50 meters or so and do that. And the results of those have been really encouraging. We've definitely shown that the Kayelekera resource is a lot bigger than we originally thought it was. And we've actually made the decision on the back of those results to do an updated mineral resource estimate. So that'll be a JORC 2012 compliant resource. And it's that new resource that we're going to be using as part of the feasibility study as well. So I was just talking about exploration. So there's the Kayelekera stuff, but I think we're also going to be able to report within the next 2 months or so the results from our Livingstonia exploration work as well. And that also looks really encouraging at this stage.
Yeah, that's great. Something to look forward to for the investors. And on that note, I mean, you guys are sitting on what, 27 million in cash. Do you want to just quickly expand on some of these Q1 expectations outside of those results? Just what investors can look forward to. How are you guys kind of spending this cash, and just kind of give us some insights on that end, because you're pretty well set up from that perspective.
Correct. So we're well cashed up at the moment. So as you've seen, we've just spoken about, there's the Kayelekera drill results that have come out. There'll be the Kayelekera resource update that will come out in the next month or so. There'll be the Livingstonia results that'll come out, and then there'll be the Livingstonia resource that will come out as well. And then we'll combine both the Livingstonia and the Kayelekera resources together to give Lotus's global resource. So we'll see that come out as well. We've also identified, when we were doing the Livingstonia drilling, just slightly to the north by about 2 or 3 kilometers, there's a very, very similar looking anomaly to the Livingstonia anomaly. And we've actually got the drill rig sitting on that at the moment, and they're going to be drilling about 1,500 meters or so of drilling there. And so within the next couple of months, you'll see some results coming out from that area as well. And that area is called Chilumba. So we're going to get some results from that. We won't be able to put a resource around that because it's really quite preliminary exploration drilling, but we'll get an idea of whether the area is mineralized and whether it's actually worth us going back there, maybe later on this year, to do some more drilling. So that's all on the exploration side from a uranium perspective. But I think we've also spoken previously about the rare earth potential as well. So there's these Melenji Hills, which sits about 2 kilometers to the north of the existing Kayelekera pit. That was drilled late last year. All the samples are in the laboratory at the moment, and we expect to see the results from those samples coming in through in the next couple of weeks or so, and then we'll be able to report on that. So there's a lot of exploration stuff coming through, which is great. I think we're going to start making some announcements about some of the results that we're seeing from our feasibility study, maybe an interim update on where we're going on our feasibility study, maybe in April or something like that. And then, of course, our target at the moment is in mid-year, so either late June or early July, to be able to announce to the market the results of our feasibility study. Assuming that's successful, and I see no reason why it won't be successful based on the results we've seen so far as well. And of course, the successful scoping study we put out previously will then likely roll into more serious negotiations around offtake and potentially financing as well, such that by the end of this year, we would be in a position to make a final investment decision if the uranium price is at the right levels for us.
Yeah, it's definitely setting up to be a fascinating couple quarters for hopefully some shareholders that are anticipating some of these results. But yeah, speaking on the uranium price there too, do you want to expand on this briefly? Because I keep referring to these, you know, somewhat of last year moving into this year is kind of almost a commodities renaissance. I mean, it's kind of incredible to see what's happened across the sectors, and uranium still trading around what, 44 US per pound, and it's definitely looked like it's holding very well, and the demand is still keeping up pretty incredibly. What are your thoughts just generally around the commodity price?
Yeah, we're quite encouraged the way things have happened at the moment. I mean, anyone who's been following the uranium price will know that the significant jump in the uranium price occurred in August and September when Sprott Unit Uranium Trust Fund came on. So it was in SPUT, as we're calling it, came online. Prices went up from around the 32s up to as high as 51 at one stage. They settled down between the 45s and 50s, and that's where they stayed for a while. SPUT has not been in the market as aggressively over the last month or so, maybe 6 weeks as they previously were, yet we've still been able to see the uranium price maintain that 45 level that you spoke about. So that's really encouraging going forward. So there's obviously other demand that's coming through other than SPUT that's keeping the price up. We do know that SPUT is looking at doing a New York listing. The timing for that, we're thinking it's probably end of second quarter, so sort of middle of this year, maybe even moving a little bit into third quarter of this year. You'll see that US listing, and we expect to see a significant increase in price when they complete that listing, because of course they'll have access to a lot more funds. So we see that as a real positive going forward. I mean, there's lots of really great news out there at the moment, which I think we've discussed about as well. There's still a European taxonomy around whether nuclear will be considered a green energy. If that does happen, and we're confident it will, again, projects and all that kind of stuff and companies will have access to more capital and to cheaper capital as well. We see that as a positive for companies that would then be able to execute projects and therefore pick up the demand as well required for uranium. So that's great news as well going forward. And you still got China, they're still talking about their $450 billion that they're going to be spending over the next 15 years, building 150 reactors. I mean, the demand, the amounts of uranium that will be required for those reactors is absolutely phenomenal. And there's going to be a lot more producers that are going to have to come online to be able to meet that demand. And we do know, when we look at the spectrum of producers around, that all the producers at the moment are looking for prices in excess of $55, I would say, and more likely looking for that $60 to $70 price before they would actually make the decision to come online. So with all the demand coming on, we would see that the price and ranking up to be able to get to those levels so that companies can make the decision to turn back on again.
Incredible insights. Yeah, this is going to be one of the most intriguing years to be paying attention to what's going on here. And I definitely appreciate you coming out and giving this direct response. I really appreciate it, Keith. Thanks so much for your time today.
No, thank you very much. Good seeing you again.
You as well. Always a pleasure, folks. And on that note, if you have any questions, always let us know what you think in that comment section below. It's the best way to get in contact. And on top of that, consider subscribing, because obviously as this story evolves, we're going to bring the news straight down the wire here. So stay cool, stay awesome. And as always, I look forward to catching you guys in the next one.